Hi everyone. Today let's start off with talking about the oil markets. Then we'll take a look at the Fear and Greed Index, economic data, as well as Max Payne. Then we'll take a look at the charts. Then we'll look at my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at the oil markets, they're saying that if the demand from China and India continue to ramp up, the oil market is going to have a tough time keeping up with demand, which would be pretty interesting. We've had OPEC continuing to pull back on their amount of supply in order to keep prices higher, and this would be interesting if demand actually starts to rally a little bit more and we see prices start to rally along with it. Would OPEC increase their production in order to reduce the amount of pressure on prices? But it is interesting to see this perspective, saying that oil prices are potentially going to go up in the second half of the year in order to meet demand. And this is coming from the Secretary General of International Energy. So it's not just some guy saying that he thinks oil prices are going to go up or that oil demand is going to go up. They say here India and China combined will make up $2 billion a day of demand pickup in the second half of the year, which is definitely a substantial amount of demand pickup, and that's obviously going to have an effect on oil prices. He was also asked if oil could spike up to $100 a barrel, and he noted that prices are already around $80 per barrel, and if we do see the increase in demand that he is expecting, it doesn't seem unusual that we could see prices going up to $100 a barrel once again, which would be a nice 20% gain from current prices. Intraday prices for West Texas Intermediate crude was down around $76, so a little bit more potential for gain there. So definitely something to keep in mind. We've also seen oil and gas stocks rallying here over the last week, and we've been covering that on the channel. But this puts a little bit more of a fundamental support behind that rally in prices. Moving over to Fear and Greed, you can see we're up at 82, which is extreme greed. We've been covering it for a while. We've been in extreme greed for a month now. And you can see that here we've been rallying for a while and we continue to be in extreme greed. So it doesn't mean that we're going to flip around quite yet. RSI also showing strength, extreme greed. Stock price breadth also showing extreme greed. We've been covering that and we'll look at those charts later. Put call ratio overall is down below 0.8, which is extreme greed. But it is interesting. We'll look at Max Payne later. The put call ratio on the SPY is still quite high. So this is overall for the entire stock market, put call ratio being quite low. But for the SPY, we're still seeing some pretty high ratios. Market volatility in that 14 to 15 range, pretty normal range for it. Safe haven demand actually in greed here, which is interesting, as well as junk bond demand. So everything is in at least greed, except for volatility, but most things are in extreme greed. Moving over to the economic calendar, we have services PMI here at 9:45 on Monday, 2-year note auction at 1300. Looking at Tuesday, 5-year note auction, as well as consumer confidence, 10 o'clock. 10 o'clock for that one could have a bigger impact, expected to be quite high here. Looking at Wednesday, that's the big one for this week. We have the FOMC statement. Expectation is the 25 basis points hike. Definitely could see some interesting stuff come out in the press conference if they are going to stick with another hike at some point this year, or if they're going to take it as it comes and potentially pause at this level again. That would be interesting. Looking at Thursday, we have GDP at 8:30, initial jobless claims also at 8:30, pending home sales at 10 o'clock. And then the 7-year auction at 1300. Fed balance sheet, always interesting. Friday, PCE, core and headline. Lots of data coming out this week, as well as Michigan 5-year expectation for inflation and consumer confidence and sentiment. Moving over to the earnings calendar, nothing big here for Monday. Tuesday, that's going to be the big one for the week. Microsoft, Google, Visa, Louis Vuitton, Texas Instruments, Verizon. I think that one will be kind of interesting with the stuff they're going through right now with those lead cables. But of course, Microsoft and Google will be the two heavy hitters. Looking at Wednesday, another pretty big one with Meta, Coca-Cola, Union Pacific, Boeing, Services Now, as well as Airbus and AT&T. They're the other interesting company with those lead cables. Looking at Thursday, we have Amazon, MasterCard, Nestle, Roche Holdings, AbbVie, McDonald's, L'Oreal, Shell, Comcast, T-Mobile, Intel, Honeywell, Bristol-Myers, tons of big companies here on Thursday. The biggest one obviously being Amazon. And then Friday, we finish up with ExxonMobil, Chevron, AstraZeneca, as well as Colgate-Palmolive, mostly just those big oil companies, and Procter & Gamble on Friday. Moving over to Max Payne, you can see put call ratio at 2.1. We talked about how it's still high on the SPY. Max Payne sitting at 443, current stock price 452-ish. Highest call strike 451. I would expect to finish below that this week. You also have a put wall at 460. You could maybe make an argument for between those two levels, but honestly, I would expect prices to be drifting lower this week. Earnings are going to make a big determination on SPY prices, but these two big call walls are pretty interesting and they are close to the money, and I would expect these puts to get crushed during this week. Not a ton of options, only 1 million in the market so far, and I'm sure that'll build up over the course of the week. But right now, this tells me the market is going to be going lower. Moving over to the charts, starting off with the SPY on the weekly, you can see we threw a wick to these previous highs here in March, got a little bit of rejection, a little bit weaker candle. We're below the midpoint on that weekly candle. In terms of trend resistance, you can see there's not much here. We're kind of clear all the way up to 4,800. Horizontal resistance right here in the high from January, February, as well as the end of March, beginning of April before we had that bigger pullback. We've also rallied pretty aggressively, just short of overbought conditions. You can see how high the EMAs here are on the MACD. Still bullish momentum, still could continue higher, but just a little bit of potential for resistance at that point. Moving over to the daily chart, you can see we are just below that 453.07 level. We're trading between this range now, 453 down to 448.74. So not a great area for stops. You could maybe put a stop at the bottom of this previous day's candle. If that breaks here, then you're looking for a move back into that 448 area. 9 EMA is still sitting at 450.21. And if those two levels break, then we have some lower trend lines to watch, as well as the 21 EMA sitting down at 443.42. You can see how overbought we were on that doji candle. I added this trend line here from the previous high to the current one, just to try to give this a little bit of shorter term structure. Momentum moving lower, RSI just out of overbought. If this breaks down further on Monday, we could start to see sellers stepping in a little bit more. That would be interesting. And based on everything here, I am short-term bearish on the SPY going into Monday. Moving over to the NASDAQ, we had a much different week. You can see where we're down almost 1% on the week, 0.9% to be exact. Clear rejection. I have some trend lines in here. Again, trying to give this some structure. Current trend support is sitting down at the 9-week moving average at 14,950, which would be about a 500-point move down from current levels. Definitely a substantial move. That would also put us at the support from the March and April highs that we were also testing on the SPY. You can also see we're at this high going back to September of 21. If we find support here, we could absolutely look for a rally up to all-time highs. That would be crazy. But right now, like I said, on the SPY, it does look a little bit short-term bullish going into the Monday session. You really want to see some support come in down at trend support or the 9-week moving average. And if it holds there, then you can be a little bit more confident going bullish, in my opinion. Moving over to the daily chart, you can see why I am a little bit more bearish here on the NASDAQ. We had that gap down across the trend, and then it fell all the way to the 9 EMA. Big bearish day that day, 2.3% down. We had another 0.3% down. We're below my support line at 376.45. And for me, my next support is down at 372.85. If it gets above here and starts to hold, I can look for a rally up to 381.90. But right now, this looks more bearish, more like a mean reversion, and could ultimately push down to the 21 EMA at 371.15. So bearish momentum, RSI moving lower. And this might be a bigger pullback, or at least something like we saw here from mid-June into the end of June. Moving over to the Russell here on the weekly chart, you can see we had a clear rejection from that 195.15 level. We're very high above all of the shorter term EMAs as well as the 200. Bullish momentum, bullish RSI. It does seem like this could continue higher. This is just a first test of this area. Maybe we get a push up to that 144 EMA on the weekly, sitting up at 198.48, which is right in line with my horizontal resistance at 198.75. Obviously, the Russell's not nearly as overbought as the SPY or the NASDAQ. I do think if any of them are going to rally, this is probably the one. The Dow looks okay too. We'll talk about that later. But right now, Russell looks pretty good, and all the signs point to bullishness. Moving over to the daily chart just for a moment, you can see those two candles down just like the NASDAQ. We're still above the 9 EMA and it could absolutely hold there at 193.61. But really I want to see this get back above 195.15, hold that level and then push up to the next one. RSI, no divergence yet. So we had a higher high with higher prices, still good. Momentum stepping down slightly, which is not great. Again, you'd like to see it hold here, then get a continuation higher from here. Otherwise, you could see a bigger pullback down to 190.50 or the 21 EMA sitting all the way down at 188.45. And if that happens, that would be a pretty substantial decline on the Russell going into the Monday and Tuesday sessions. Definitely one to keep an eye on. If it holds, could be a nice rally. If it breaks from current levels, that's going to be a substantial drop in my opinion. Moving over to the Dow, you can see this wider time frame. You can see this big bullish candle that we had. Looks good. We're up into these previous highs going back to April, just like we've been talking about. Wicked the highs going back to August of 21, which is interesting. And if these levels break, there's basically nothing until we get to all-time highs up at 365. So that would be a nice move for the Dow. Absolutely looks like it could push into that zone. We're on a run, bullish momentum, bullish RSI, not overbought. You want to see volume start to pick up next week as this continues. But honestly, I would expect it to continue to rally here. Similar move to what we saw out of some of these consolidations going back to August of 22 and the rally in October of 22. Moving over to the daily chart, you can see this looks a little bit less bullish. Got some rejection from this trend line. If this holds and we start to break down to the 9 EMA, that's at 347.34. Still have some potential support here at 350.92, but if that breaks, 347.67 is the next area, which does sit right next to that 9 EMA on the daily. Momentum still bullish, RSI overbought and pulling back a little bit. So again, showing a little bit of short-term weakness on the daily chart. It does not confirm the same type of movement that we're seeing on the weekly chart. Moving over to copper versus gold, big bearish candle engulfing, momentum and RSI looking weaker, starting to break down here. If VWAP holds down at 1926, that would be interesting. Set up a higher low and then a rally, but you can see this kind of looks like a double top here. And if this midpoint breaks, we could push back down to this previous low, which would be a bearish development in my opinion. Kind of interesting considering what we're seeing in the oil markets with increased demand. Usually increased demand in oil means increased demand in copper, which should send this ratio a little bit higher, but we're just not seeing that quite yet. But if we do start to see it, that could be a nice indicator for some bullishness to come. Moving over to the equal weighted S&Ps, you can see looks very similar to the Dow. Couple of bullish weeks in a row, pushing up to these January highs, looking to retest that 155.79 level. We're holding in that zone. We're kind of at a trend line and it does kind of look like a wedge, which is interesting. If it breaks down from these highs and we see a more substantial break, that could be very bearish. But right now, everything looks good. Bullish momentum, bullish RSI, not overbought. Similar to the Dow, it does look like this is going to push up into these upper ranges, potentially even past that 155 level, maybe even up to 160 or so. Moving over to the ratios, starting with the NASDAQ SPY and the NASDAQ Russell. As we suspected on both of these, we got a big bearish candle. Finally, pulled back from resistance on both of them. We're back below 343, looking for a pullback down to 331 or potentially 21 EMA. Either way, this looks quite weak. Got the break, clear rejection this week. Moving lower, momentum lower, RSI looking weaker. NASDAQ Russell, big pullback as well, below 788 now. 21 EMA sitting down at 760. So looking for some NASDAQ underperformance over the next couple weeks. And once we get into some of these more interesting levels, we'll have to keep an eye on this, looking for NASDAQ outperformance at some point in the future. Moving over to SPY divided by the M2 money supply, you can see we are very, very close to these recent highs. You can see the COVID high, 2021 high here. And then once again, in that same zone, getting very close to 2205. We didn't touch it quite yet. And you can see we overthrew that just by a little bit in 2021, maybe all the way up to 2218. The high here from this candle was 22.29. If we do get one more week of bullishness, hit these highs, and then we could look for a strong rejection from that point. Right now, we're not seeing it quite yet. We're just in this very clear zone of supply. Momentum bullish, RSI right at overbought, 69.38. Didn't quite get there yet, but definitely super interesting in this zone. And if we get a clear rejection, this could absolutely break down into these previous lows in a similar fashion to what we saw over the previous year where we pulled back from that same level. Moving over to Apple and Tesla, you can see that wick rejection at that same level, looking for a double top pullback down to the 9 EMA on the weekly, looking at 186.25. Also have horizontal support here at 186.81. So again, looking like a topping formation, potentially pulling back from this zone, certainly possible. Tesla, huge engulfing red candle on earnings. We talked about this potentially pulling back from the zone. I expected an overthrow of 302. Came up just short and ended up topping out at 299.29 before we got the earnings announcement and a pullback. I would expect to pull back to the 9 EMA down at 249.59 before we find major support. Huge bearish candle. Momentum stepping down dramatically, RSI pulling back, volume stepping up. Everything looks a little bit more bearish here on Tesla. Moving over to Microsoft and Netflix, you can see Microsoft also throwing a big pin bar, rejecting from that level. Already in the same zone of consolidation below my level of 344.86. Certainly could pull back some more. Big bearish volume on that candle, momentum pulling back. Netflix had their earnings already, huge volume on that candle, clear rejection from 455.91, pulling back now to the 9-week moving average, VWAP sitting down at 402.10, 21 EMA all the way down at 368.75. Certainly could pull back some more as we see indicators showing more bearishness to come. Otherwise on Microsoft, we'll see what happens with their earnings this week. They tend to put out some pretty good earnings and pretty good guidance, so it wouldn't surprise me if they just continue to rally on their earnings. But at this point, the standard is quite high considering that they are at all-time highs for price. Moving over to staples and discretionary, we talked about staples breaking out here, getting above 75.40, looking for a push back up to 77.50. Clear rotation going into staples here, and I would expect this to continue higher into next week. Discretionary pulling back, Tesla pulling back, driving this lower down to 166.78 for a price target in my opinion. 9-week moving average sitting at 165.23. You also have the 144 at 164.84, so everything consolidating in this same zone. Momentum pulling back, RSI pulling back, volume stepping up on that bearish candle. You're also at the top of the trend. We talked about that for a while. Grinding along this upper trend line. Now we have a bigger breakdown from that. Tesla driving this lower in my opinion, and rotation out of those riskier stocks. Moving over to utilities and oil and gas, I continue to talk about these. They are some of the top performers. Utilities consolidated and broke out. Looks good. Up to 168.36 now. Oil and gas also consolidated and broke out to 135.07. We're above all the EMAs and SMAs now. Looking to push up into this previous zone, 144, potentially into these highs up around 160. If the thesis from the article that I covered earlier is true, we should expect oil and gas prices to continue higher, and that would push this ETF higher as well. Moving over to transports here on the weekly, you can see we continue to rally super aggressively, looking for a test of that 266.53 level, momentum bullish, RSI bullish, everything still looking quite clean. If we get up to trend, that's going to put us kind of in this mid-range for this previous consolidation. Could overthrow that and push up into these highs. That would be interesting, up around 279 or so. That'd be a really strong push over the next few weeks. But transports and the Dow looking very strong going into the next week. Moving over to breadth, looking at the 50 and the 200, you can see the 50 getting into the zone at 92.25. That has been the peak for a lot of these markets here. Anytime we get here, it doesn't last very long, and then we have a more significant breakdown from that level. So definitely in an area that is considered overbought in my opinion on the 50-day average. 200, not nearly there yet. We're in a zone where you could find resistance, 76.04. Definitely an interesting one. We've had some rejections from that level, but you can see the high from 2021 here where we rallied all the way up to that 92-ish zone, all the way up to 96.40 at one point before we had our bigger pullback. So this could certainly go higher. The 200-day average not overbought quite yet, but the 50-day average showing that we're probably going to have a rejection in the next week or two where we have some decent follow through in my opinion. Moving over to the dollar on the daily chart, you can see it did exactly what we thought, bounced from this trend, rallied up to resistance now. Momentum still ticking towards bullish, and this could absolutely overshoot my price target. We also have a little bit of shorter term trend resistance sitting just above these levels at 101.37, 21 EMA at 101.81. So it could certainly see a little bit of an overthrow here here. If the dollar continues to be bullish, that's going to be weak for equities, especially if it starts to break through some of these EMAs and SMAs and looking a little bit more bullish. Right now, the trend is still super bearish, and this is just a retracement up into these zones before we expect a bigger move down, which is what I have templated. I do think we'll probably get close to that 50 on RSI, 21 EMA potentially, and then we see a bigger pullback, but definitely something to watch going into the next week. Moving over to JNK and TLT on the weekly charts. JNK still looking pretty strong on the week. Through another wick to last week's highs, still below that 92.50 level. Still want to see it hold above there and start to break out, but we're above all the shorter term EMAs, 921 VWAP as well as the 55 on the weekly. Momentum bullish, RSI looking pretty good, so potentially indicating some more bullish prices to come. TLT still in the zone of consolidation, has not engulfed this bearish candle that we had in the first week of July, so still looks like a bit of a pullback on the weekly chart in my opinion. And you can see that here, getting down in that 100 level, rejecting, hitting VWAP, throwing a pin to that level, and if this continues lower into next week, it's going to be a pretty bearish sign, and I would expect to see a lower low coming, potentially down to that 96.50 area. Moving over to the VIX here on the weekly, you can see we're in this zone between the 1177 and 1490. Could absolutely hold in this zone for a while. We did see a slightly bullish week at the lows, momentum ticking higher slightly, but not really showing us much of anything yet. Could certainly hold in this zone for a long time, just like we saw here previously. Continue to say it, VIX not showing much of anything quite yet. Moving over to my accounts, you can see I have those 100 shares in my taxable account, as well as 100 shares in my Roth IRA here on the IWM. I still think the Russell looks pretty good going into next week, even if it pulls back a little bit early in the week. NASDAQ, on the other hand, all I have are some calls. I expect it to continue to fall into the Monday session and potentially Tuesday as well. We'll see how that plays out. I should have sold a call here on these Russell shares. I did not do that. I did at least sell one here on my taxable account, so not too bad there. Overall, neutral to bullish on the IWM. NASDAQ, on the other hand, definitely bearish. Let me know down in the comment section what you think of the oil demand potentially coming in the second half of the year. Will it drive us up to $100 or $120 a barrel? And can we make some profits on that move? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.